Good day, guys. Welcome back to the channel. Wherever you are watching me from, either you are in Africa, you are in Europe, you are in Russia, you are in the US, you are Nigerian, Kenyan, from Barbados, from Canada, from UK. You're all welcome back to the channel. Welcome back to one more session on live trading. This is actually our live trading for this year. And as I said in the previous video, I'm going to be putting more of live trading videos here this particular year because most of you guys here, you lack actually practical skills. You just watch the videos and you go and do your own thing, which is not nice. Okay, so I'll be dedicating most of the time for live trading videos and finding forex episodes, so you gain more experience whilst you're trading. Okay, I've talked enough of technical, so some of the practicals will also help you. Just that it's difficult to record live trading videos because you have to be trading and talking and recording and talking, and it's very difficult to do that. That's why most of the time you don't see me doing it. But this time around, I'm going to try my best to always put some live trading videos here so that when you watch, you gain some experience and you see how we behave as traders when we are trading, how we analyze the market, how we take our trades, and how we enter our trades or how we exit our trades. So you also learn from it. Okay, so welcome back once more. If you are here for the first time, then kindly subscribe to the channel and like the video. If you are the old subscriber, then just like the video, just for algorithm to push the video through more. Okay, so if you are here, then let's begin. Let's begin with our live trading. Today's live trading is actually going to be focused on you guys. Most of the time, the live trading I've been doing here, I'm focused on myself. I trade my big account, but for this particular live trading, I'm going to be teaching you how to grow small accounts. Like I don't advise anybody trading if you're a beginner or you are somebody who have not made profits out of trading, or you make profit and you lose, you make profit and you lose. I don't advise you trade with capital more than 3,000. As I said, at least you must have $500, $1,000, $1,500, or $2,000 in your account. That's all. And you're going to trade and practice with. If you are trading and you are still not making profit, consistent profit, don't trade more than any capital which is more than 3,000. So for this particular live trading sessions, I'm going to trade so that you guys can follow. If you have small accounts like $500, like $1,000, like $1,500, you are going to trade with it. Okay. So let's assume that you have $1,000 and you are risking, let's say, 10% of $1,000 is what, $100. We're not going to risk 10%. You're going to risk something like 5%, which is $50. Let's say you have $1,000, you risk 50 to make 100, 50 to make 100, 50. When you lose 50. When you gain 100. That's what we are going to be doing. So if you also have $500, then calculate it in your own terms. If you have $1,500 in your account, calculate it in that terms. If you have $2,000 in your account, you must also calculate it using that terms. Okay, you're going to risk just 5%. That's all. So just in the same way. Okay, so just follow the steps and follow how I trade, follow how I analyze the market, and you also do the same. Okay, so without wasting my time, let's begin with our live trading video for today. Okay, guys, so let's begin looking at the currency strength meter. And as you can see on the currency strength meter we have today, we have the euro to be strong. Can you see we have the euro to be strong? We have the yen to be strong. Looking at it from the H4, the euro is +2, so we are going to use it. The yen is +1, we are going to use it. And even we can say the AUD is also strong because the AUD is also +1. Any currency which is +1, above +1 is very good, so which means it's very strong. Now, let's look at the weakest currencies. And from the weakest currencies, we can have the CAD to be weak. We have the USD to be weak because the USD is -4 from the H4 is -4, and the CAD is -1 from the H4. What we don't want to do is to trade those in the middle here. They are neither strong, they are neither weak. They can change their mood at any time. So from the H4, we have the euro, we have the yen, we have the AUD, and from the weakest point, we have the CAD and we have the USD. So if we want to find a trending market, we merge any of those guys here with any of the down here so that we get a trending market. For instance, we want to find a market which is trending. So we just have to find what? One strong guy and one weak guy, we made them together, and definitely if a strong guy is chasing the younger guy, the weaker guy, definitely the market will be trending, right? Good. So that's why we want to merge the stronger with the weaker. So let's go to the chart and see if we can find euro let's first merge euro and the card. So euro card first, and then we merge the yen with the card, and maybe the euro and the USD. So let me just type it here so you'll be able to grasp it easily. So first one we have, let's find first one, euro with the card, right? Euro card, that is our currency we are searching for. The next currency pair we want to look at is guys, let me clean this, or this one should go. Okay, so first euro with the card. Second, we can merge the same euro with USD. So we can still input euro USD. So euro versus the USD, and you could see that we can also get a trending market. Now we can merge euro, yen. We can merge yen, Japanese yen, with the card. So on the other side we can merge card yen. So we can say card yen. Let me change the label to somewhere green so you don't get confused. So card yen, CAD versus the JPY, card yen. Oh, let me clean this. Card yen, and no, let me edit this. Card versus the yen, and I think we should still maintain the color to be red. So okay, let me just leave it to the same green color. Okay, I think this is cool. So card yen, and you can also merge the yen with the USD. So USD yen. So USD versus the JPY. So somebody may ask, why is it that the card is weak, but that's what is leading? Why am I writing it card and the yen? Why not the yen being stronger? This is because of the quoting. The brokers, this is the standard national international quoting. So how I've arranged it is not based on which one is strong, we should come first. No, I'm just merging so that we know the pair. So though we know that on our chart euro is strong, yen is strong, but when we are quoting it, we normally say card yen. We can't say yen card. It's actually the other way around. Okay, so just remember that card yen is a pair we are going to look for trade. So all these four charts we can open and we can find out that the market will be trending. That is why we are merging these four charts. So let's go and see if you can find any trade to take on any of these charts. So we go to our file, you go to new charts, and first one is what? First one is card. First one is euro with the card. So euro card, euro card, euro card, and we have euro card. We input our templates, and that's it. Here is on the H1. Since I'm doing live recording, H1 is too far for me to record, it's too long, so I'm going to M1 so that I can record the trade faster. Good. So now we are on the M1, but I could see that the market has a very wide spread. I've been talking about this every time. If you see this in your chart, I don't advise you trade. That is the difference between the bid and the ask price. So don't trade a wider spread, okay? If not, you can be taken out easily. So what causes the spread? I will explain later, but if you don't see these two lines on your chart, every day you must see two lines on your chart. Some of you guys complain that sometimes you see your stop loss did not get hit, but the market took it out. It's because one of the lines were missing. So let's say this red line is missing. If this green line gets to a point and it takes you out, you might think, oh, the candlestick has not reached my stop loss, but I was taken out. It's because the red line has already hit your stop loss or your take profit target. So that's the difference between the bid and the ask price. So you are not supposed to trade any market which has a wider spread. If you want to see how this spread should be set so that you see it every time, you right click, you go to properties, and you go to show, and you go to ask price line and the big price line. These are the two ones you have to show. On trading view, you can also do the settings. Okay, so though we've opened euro card, but we are not going to trade it because the spread is very wide, but we could see the market is actually trying to trend. we could see the market is trying to trend, but we are not going to trade this particular market because the spread is wide and it's not worth us trading it. The next one we can look at is the Euro USD. So we go to File, New Chart, and we go to Euro USD is already here. It's a pair I like to trade. So we input our templates and bam. Still we are on the H1, so we have to go to M1 so I can record my trades. On Euro USD, you could see the spread is very tight. Can you see? This is what you have to be looking for, guys. This is what you have to be looking for. So Euro USD, and you could see that the market is not actually a good market to trade right now because there was an event which moved the market. The market spiked up because there was an event, there was a news event. So I don't advise we also trade this particular market because the market is not stable for us to trade. But if you open it on H1, you might not see the effect. But on M5 and the lower time frame like M1, you will see the big gap difference. Okay. But if you are to trade this on H1, you could see that the market was trending, and you could see it broke out of the trend. So the market is trying to reverse the trend to the upside. You could see that's good. So as we are trading here, I would have waited for the market to come down, and if it gives me a nice confirmation pattern, then maybe I'll take the trade upwards. But since that's not what we are trading, we are not going to do that. So forget about this. Let's go to different pair. So the next pair we can search for is the CAD with the yen. So File, New Chart, and CAD yen. And we input our templates and we go to M1. You could see the CAD yen also has a little wider spread, but it's better than the other one. So to narrow it, we can see that this market is actually trending downwards, right? Good. And what else can we see in the market? So we could see that the market is trying to make some bouncing. So if you put moving average here, you will see the market is bouncing off one of the moving averages. But aside that, we could also see that there was support areas here. The market broke out of this whole support zone. So it's likely that if this market is to come back now, let me increase a little. If the market is to come back now, it's come to hit here and may reverse, which has high probability of reversing. So in trading, we trade with higher probability. So the market may hit, come back and hit, and may reverse. So if it reaches us whilst we are still trading, then we will take the trade here. If the market comes to hit this zone, because I'm expecting it to hit around this zone and gives us a confirmation pattern, we will take the market downwards. But until then, let's go to the next chart and see what we can get to trade. On the next chart is the USD yen. So File, New Chart, and we go to USD JPY. And we go to templates and we insert our template. Now back to M1, and we can see I think all the pairs with the USD has the news effect, so we could see the gap here. But either way, what do we see? We see the market was also trending downwards, right? Downwards, it broke out of the same gap here, and it's difficult to the market to come back because the market can come and fill the gap easily, but we can still take some trade. As when the market is supposed to reverse back, we can take some trade there and send it down, or the market can just move speed and break out of this whole support area. And if it breaks out of this whole support area, then the market is either going to use that same support as a platform to reverse the market up, or the market will begin to range around that area. But we are hoping that the market do this instead. So we are going to wait a while. If the market comes meet us whilst we are still trading, we will take the trade. But until then, we will just have to wait. We will wait and we will not take any trade. So you can see we've opened all our charts, and it's time for us to wait for the market to come and reach where we want to take a trade, and then we take the trade. But on the currency meter, we can also trade ranging market, which is the yen and the euro, because both of them are strong. The AUD is also strong. So on the other side, we can also look for ranging market. Let me make it a different color. Let's say this ranging market, and we can make it let's say euro JPY. So euro with the JPY, and we could see that the euro JPY can give us a ranging market. The euro AUD can also give us ranging market. So file, no, let me just type it first. So Euro AUD can also give us ranging market. So Euro EUR versus the AUD can also give us ranging market. So let me arrange it here. Okay, so now let's look for this Euro JPY and Euro AUD. New chart, Euro JPY is here. We input our templates, and on M1 we are looking for ranging market to trade. So what do we see? See, the market is ranging, guys. So what do we see? We can see 9 support areas here, right? And we can see some resistance around this zone. But where actually overall is the market heading to? We could see that if the market is heading down, it's heading somewhere. So let me do this. Okay, it means the market is heading somewhere. You could see back here there is strong support around the zone, which the market is likely to reverse now. So if the market is to reverse now, then where can we take the trade? Good. You see the market is trying to reverse. Can you see? The market is trying to reverse upwards. In case the market is able to reverse upwards and hit this zone, then we are also going to take the market downwards, because we assume the market may come back. So we also wait. If the market comes to hit this zone, we will try and enter here and take the market downwards, which means you are still trading, we are still within the range. Okay, the next one we have to look at is the Euro AUD. So file, new chart, and Euro AUD. So Euro AUD. Good. And we input our templates. And let's see on M1. Euro AUD has a very tight spread. But there's nothing we can do. So it has a tight spread when we analyze it in the first place. So we stick to this particular chart, which is the Euro JPY. So we wait a while to see if the market is able to hit here. So I'm going to put my sell limit order somewhere here, somewhere here. And let me add one more sell limit order and wait to see what happens. If the market is able to come back, then we will take it down. So I'll pause the recording up, and when it comes back, I'll resume. But let me put an alert here to see if it can give me an alert for me to know the market has reached that level. Okay, so I'll just pause so that the recording will not be too long. I'll just pause it and come back and check later. Okay, so wait for me. Okay, guys, so it's been some time now and I'm back. I could see that the market is almost hitting my sell limit order, and I'm here to see if it's actually going to trigger me. Looking at the delays the market has made here at this zone, I'm actually suspecting that this market might break through and maybe it might take my stop loss, hit somewhere here. That's what I'm suspecting, because of the delays the market has tried to play here. But nevertheless, we can't tell what happened in the market. So since I've already entered my sell limit, I will just wait for the market to log me in. So that's my sell limit. So I'll wait for the market to log me in, and then I'll set my stop loss and my take profit target. So let's keep waiting. We wait for some time for the market to trigger me in, and we will see if we can take the market somewhere back down here. Patience is everything, guys. So when you're trading, always be patient. Okay, don't forget to be patient. If you lose patience, it means you're losing the game. So just have deep breath and always stay focused and trade as you have been taught. Okay, don't do your own thing. Okay, don't do that. So as you can see, we are almost in. Has it taken me in? I think one is activated. Let me open my my toolbox. Okay, one is in already. One order
Okay, this is the one I placed, but so far it has not activated any of my orders. It's still placed. Can you see? It's still placed, and I haven't taken any of my orders. So I'll just wait. I have 2 orders waiting. I will just wait. Okay, let me just hit sell. Let me sell at 1. Let me hit sell. So now I've hit sell because it didn't fill my orders. My order didn't get activated. So I'll now set my stop loss somewhere here. Okay, somewhere here is a good place to set stop loss. And take profit target somewhere down here. This is actually just an example for you to see how you trade. So a small stop loss of about $60 with small account. So let's say $60. So if you are making, then you have to make twice, right? You make twice as 60 times 2 is 120. So we make somewhere around $120. And so this is where we will take our profit. So now that I've entered, all what I can do is to wait for the market to either come and hit my take profit target or to go and take me out, my stop loss out. Okay, so I will just keep waiting. And this is how you have to trade as a beginner, guys. Don't be rushing to take huge trades, because as a beginner, you have to take it step by step. I mostly like to trade for beginners to see, because they have no experience at all, and when they are trading on their charts, how they are even going to behave is actually very strange. So when I record live trading here like this and I put it here, it at least, if you are somebody who is now beginning to trade, you also see what happens in the market, how real life trading is done. Okay, so I'll be focusing more on this kind of stuff, this kind of beginner stuff, so that anybody who is now having their feet on the ground will be able to have strong feet on the ground and learn well. Okay, so now we will just wait for the market to either hit our stop loss or take profit target. So let's see. So you can see we are making some small profits. This is very funny, but let's just do it. So which means if this trade loses, we are just losing $60 of our account, which is the small account. So let's say we lose minus $60. And if, let me make it red. So if this trade goes against us, we lose just $60. If it goes in our favor, we gain 100. So this one will be green. We gain 100 into our account. $100 into our account. And it's the same method you can use to build a bigger account. So the same strategy, guys. So if you can't make any profit with a small account, then how do you think you can make profit with a bigger account, guys? You must be able to make profit with your small account, your $1,000 account, your $1,500 account, or just $500 account. Make profit with it before you can even think of depositing huge money into your account to trade. Okay, so if you can't make profit with small account, never deposit a bigger account. Never deposit a huge money to trade a bigger account. Try your $500 or your $1,000 first. Make profit with it, consistent profit. And when you're profitable, you can now top up 3,000, 5,000, now 10,000. And now you are a real professional because you've learned all your mistakes. So learn how to grow such small accounts. And as you can see, we are making some small profits. And most of you guys are happy, right? Because you are making some small profit. But don't forget, this is trading. It can actually turn around and hit a stop loss. That's why you must always have your stop loss. So for it not to take longer, I'll also pause it again and resume it when it's about to hit my take profit target, or when I realize it's hitting my stop loss. So let me just pause it not to make the video longer. Okay guys, so we are back and it looks like we are almost hitting our take profit target. Can you see? This is where I have been telling that if the spread is not tight, you shouldn't be trading. You see, the candlestick has hit. Let me clean this guy. This is not part of the order. The candlestick has hit the take profit target, but it still didn't trigger me. It didn't take me out as take profit because the spread is too wide. So though the candlestick has touched it, but it's still waiting for this spread line to come and touch. This is why I first said that if the market has a very wide spread, you should not be trading because it will still hit your take profit target. Can you see? It came to hit, but still did not trigger us. So this is actually a winning trade. And the painful thing is that after it has hit, I'm telling you that I've seen some before, it can still go back and hit your stop loss out. So at this point, most of you guys will say, why don't we take profit? But actually this profit is nothing to me, so I'm just using to show you something. At this point, most of you guys will also say, let me take profit, let me take profit, let me take profit, because hey, I'm afraid to go back and hit my stop loss. But if you take profit, you are going against your system. It has not hit your $120 system and you can't take profit. So if you take profit, somebody say, why is it that now it's 80 and now it's 70, you can't take profit now? No, you can't do that. Okay, if you take profit, you're going against your system. So if this trade is able to go back all the way and hit the stop loss, then I'll wait for you to do that, just to show you guys something, because $100 is actually nothing for me. So I'm just showing you, but it can come and hit our take profit target again, and then we make a winning trade. But I'm showing you that, you see, it came, the candlestick came all the way, but still did not take our take profit target. You see where it's going. At this moment, most of you guys cannot control your emotions and you'll be shivering. Hey, I'm going to lose, I'm going to lose, I'm going to lose. Don't do that, okay? Don't do that. You see where it's going now? $19. See, it came all the way here. We gain our 120, but it did not take us out. Now it's going to take our stop loss. Have you seen how trading is? Good. So if the spread is wider, I don't advise you trade. This is a typical example. I just wanted to show you guys a longer time. Today I've gotten the opportunity to show you because I'm talking about it, but you guys actually don't know what the practicality of it. Now you've seen the practicality of it, that the candlestick can still touch your profit target, but it will still not log you out unless you automatically switch it out. And if you automatically switch it out, it's not going to rate your amount that you are going to search for. It's going to reduce. Instead of, let's say, $120, it will give you like $100 because you automatically log out yourself. You see, so that's the effect of trading a wider spread. Okay, so if you see a wider spread, what do? You run away from it and don't even trade because it's going to mess you up. Okay, but this is a good lesson. Let's focus and see what happens. Either it comes to hit our take profit target or it goes out of our stop loss and we are out. So let's wait for some time.